Welcome everybody. Thank you very much for joining us. Really a packed show today, a packed show. We've got Rebecca going to talk to us about currency, which I've got to be honest, it's the first time, Rebecca, you've been on the show, and that's remiss because you should have been on before. We've got Reese from Global Residential, we've got Jonathan from Global Residential, and Carol from Sykes, who's the Business Development Manager. So welcome all. Please, if anyone has got any questions, put them in the comments at the bottom, and we'll try and answer them as we go along. Rebecca, you've been working with Holborn since 2006.
I have indeed. So back in the days when they were in the old office in the Pyramid Centre, when it was just, I believe it was about 10 consultants then, to seeing it grow into the huge success it is today.
Well, I'm really glad you're on board, and let's hope it's not the first. So do you want to share your screen, Rebecca?
Yes, certainly.
Tell us all about clear currency and how clients and consultants can save money on transfers.
Sure. So I'll just go back to the beginning. So yes, I am working with Clear Currency, and the company was formed initially by ex-Treasury bankers who were working in the corporate division of one of the banks in the UK, and they established Clear to be able to offer exclusively discounted exchange rates, wholesale rates, and treasury services to corporate clients initially. Fully regulated by the Financial Conduct Authority in the UK. And as I mentioned, initially it was for corporate clients doing import exporting, transferring hundreds of millions of euros, dollars, pounds, etc. But then we rolled out the private client department to be able to give our private clients the same discounted rates as somebody doing millions in a transaction. So we have the corporate division and the private division, and the benefits of using us is obviously the exchange rates. Using your bank, as most people hopefully know these days, is not the cheapest option when transferring foreign currency. The banks are typically taking between 1% and 3% on the exchange rate, which is usually hidden in the rate. So the client will assume going down to the local bank that they're going to get looked after, get a great rate, but actually unbeknownst to them, they're usually taking around 1% to 3%, which on a £100,000 transaction, if you're losing up to £3,000 is significant. So the solution we offer is giving them access to the wholesale rates of exchange, no extra fees or commissions, and their own dedicated trader to guide them through the whole transaction from start to finish.
The thing is that, and I've chatted to you before, last year I needed to have some money transferred from the UK to Dubai. It was only £10,000 only. It was £10,000, and it was unbelievable amount that NatWest tried to charge me. I guess because of the global financial crisis, they all found themselves in a hole, and this is their way to dig their way out of it. But it's outrageous. So it's brilliant that clients. And can I just ask a question for clients and wealth managers that are on? Are there any limits on the transaction? As you know, we take a deposit on a reservation, then exchange of contracts, and then finally on completion. Where would you get involved? Would you get involved in all three, or is there a minimum?
So there's no set minimum, but our business model is really for larger amounts. So on the first initial reservation, absolutely a client can use this for £5,000 transaction. Usually they're in a big hurry, and the last thing they're thinking about is currency. So where we usually get most of our clients coming to us is after they've paid the reservation. They've obviously secured the property deal, and then they will talk to us and get everything in place ready for their deposit.
The other question that I wanted to ask is, and you just explained that really well, so the 5,000 has got to be paid. They should really be getting in touch with you then. But how long does it take to set it up and then the money be transferred?
Really, really quick, Chris. Can sign up within 30 seconds on our website. We just need the usual compliance documents that most financial services companies require, which is passport copy, a proof of address. And once we receive that, then our compliance team will activate their account within usually a couple of hours. Then they can just book a rate straight away. And the whole process from start to finish is 1 to 2 working days usually.
So really, people should be getting in touch with you straight away, and then they can do all three transactions, as it were: the res fee, the exchange fees, and then completion. So next slide.
So I just wanted to show the significance of the currency movements and the benefits of clients speaking to us. It's not just about saving money at the time when you're making the transaction. It's also about timing of when to buy your currency. Obviously, we don't have a crystal ball, but we do have dedicated traders that can give currency movement guidance to our customers. So if you look at the last year, just the last year alone, we've seen some significant movements for the pound against the dollar. I've used the pound and dollar because obviously that's the major pairing of currencies, and a lot of the transactions that are relevant to these property transactions are obviously based in sterling. So for clients buying sterling, they've got pounds, or for clients buying pounds and they have a dollar or dollar pegged currency, it's going to make some significant difference to them. So just between now and this time last year, we've seen a low exchange rate for the pound to the dollar of 1.3059, and we've seen it as high as 1.4065. So calculating that is around just under 8% difference for the clients, which is a huge amount of money. If someone's investing in the property for the returns and the currency movement is benefiting them more, they can potentially gain another 8% on top of their investments.
Another question I wanted to ask, you mentioned dollar pegged. I'm assuming therefore dirhams, okay?
Yeah, so I just, again, this is a mimic of the last slide, because the dirham is pegged with the dollar. So again, we've seen a low of 4.7966 to a high of 5.1663. And just to kind of make it crystal clear, when you're looking at a transaction of £250,000 from dirhams or dollars, just in the last year alone, that, I don't know if you can see,
yeah, we can.
My screen has covered it up, but it's just over 65,000, just under 66,000 dirhams savings for a client, which is just under £14,000, which is just over $19,000 that the clients are saving today compared to this time last year, which is a huge amount of money.
On the actual transaction itself, say, let's just do a typical exchange of contracts and just say they're sending over £50,000. That I think that'd be quite typical on an exchange of contracts. They're sending their 10 or 20%. What would you think they would achieve by using Clear? Never mind the currency exchange, but costs alone. Or have I thrown you under the bus with that?
No, not at all. Not at all. Obviously, it's dependent on the client's bank, the relationship they have with their bank, whether they're a premier customer or regular customer, depends on what rate the bank will give them. But typically, based on my experience, they would be saving between £500 and £1,500 using our service on £50,000.
Well, everyone should be using it. And I asked you the question before. So a typical client would do a comparison with their own bank, with Barclays, and then speak to you, or vice versa, and then just go with you. I mean, it's as easy as that, isn't it? There's nothing else to consider.
Yeah, I mean, it's a no-brainer. Every client should have the opportunity to speak to us. We just ask them to do a like-for-like comparison so they can see our rate against their banks. And as you said, it's a no-brainer. The banks are not giving them the most competitive rate. So why let the banks get away with it? Why not speak to a currency specialist and save some money?
And the good thing is, of course, you're often over in Dubai, ignoring COVID for a minute, and the wealth managers and clients can actually get to meet you if they want to. And the next slide, please.
So this is just going over the process to use the service. As I mentioned, it's a really quick sign-up form through our website, and send through their ID copies. Once they've signed up, their account's activated, they can then book a rate online through our platform, or they can book a rate through their dedicated trader or via email it's up to the client, whatever works best for them. It depends on the time zone as well. Our traders are in the UK, so they're in Ireland and in the UK, in London. So if it's out of the time zone and someone's in Asia, for example, they can log in and book a rate for our platform. Once the rate's booked, then they just need to transfer the currency they have to our client account. Once we receive that, then our bank releases their currency into the requested account immediately.
That's amazing. Do you have another slide?
So this is just some testimonials of clients that have used our service, just to show really it's a fantastic service we offer. And you know, as I mentioned, every client should be given the opportunity to save some money.
And everybody that's looking at that screen, write down the Rebecca's email address and her phone number, and then you can kind of get in contact to her directly. So that's really good. No, it's very good, and I think everyone should be using it. I really do, including me 6 months ago when I lost all that money. So I apologise for that. Thank you very much. You're in Spain.
I am in Spain, but you wouldn't know it given the weather outside is absolutely appalling. I think it's about 12 degrees today, so I think it's warmer in England.
So that's good. So you can stay on for the rest of the show. And with that, can you stop sharing your screen, Rebecca? And thank you very much. That was brilliant.
Thank you very much.
And then Reese is now going to take up the challenge of sharing his screen. Wow, look at that. That's so good. It's like we've done this before. Reese, welcome back. I know you've got lots of news. I know, you know, we're going to do the holiday homes now. And so welcome back. And maybe if we've got time at the end, we can talk about other stuff that you've got going on that our guys are aware of. So I'm going to hand it over to you, Reese.
Perfect, thank you. So for anyone who's not aware and hasn't joined Chris's fantastic show, I'm one of the managing partners for Global Residential. So I'm actually based here in Dubai, but for Global Residential, we focus on UK property investments. Historically, it's been typical buy-to-lets in high growth markets. Our USP to a client is that we have boots on the ground in the UK. Jonathan Lewis, who's currently on the call, is in the UK, and through our research, we look to identify the best in class, and that might be from the strongest growth potential on a property value. But in this case, it's quite a new sector for us, staycation markets, and it's really come off kind of the back of the pandemic, restrictions on travel. So I thought it was quite useful just to give a bit of an insight into the sector itself. And as for us as a company, we understand clients might all have different circumstances. If you are sat on a significant amount of capital that you're looking to generate the most amount of income, something like this most certainly could work. But we do have a range of product that hopefully, if we do have time, we can cover off at the end of this call. So today, as I mentioned, we have got Jonathan Lewis, who is based in Sykes, who's based in Sidmouth, where one of our projects is that we'll be discussing today. But to start off with, I am going to introduce Carol, the business development manager for Sykes, who will be the lettings and management partner on this particular development. So before I do, just to give a quick highlight overview on market sentiment in the market, and probably one of the biggest for me, because we are looking at historically buy-to-let properties. To the bottom left, over a week ago, it was published that over 11,000 residential properties have changed into holiday home lets, simply because there's a huge demand. Now, I think off the back of lockdown, and UK residents really have become kind of creatures of habit, in the sense that they weren't able to travel due to restrictions, getting COVID tests, and again, for people not actually feeling comfortable to travel, they found kind of beauty within the UK. And that's really what the point of today is, obviously having Carol on to talk about this sector, if it is just a short-term blip, or if there is genuinely a market for holiday homes in the UK for the medium to long term. So I'm going to pass over to Carol, who will give a brief intro as to who Sykes are and really kind of how long they've been established. So, Carol.
Thank you, Reese. So I'm the business development manager here at Sykes Holiday Cottages, and we've been established for over 30 years. Just to give a bit of indication of who we are, we're private equity backed by a company called Vitruvian, and that's the private equity house behind Just Eat and Skyscanner. Our portfolio has grown massively over the past 5-6 years, and that's through our own kind of like merger and acquisition, ambitious growth plans that we have as an organisation. So currently we're just trading over 21,000 properties within the UK, Ireland and New Zealand markets. I think one of the key points here at the moment is we've seen massive growth, just what Reece is saying beforehand. And when we have a look at the UK leisure market, there's actually over 2 million rental properties, and Sykes as a business that are actually tracking over 300,000 second home leisure holiday homes. And that's split between agency, rented and non-rented. And you can see to the right of this chart as well, you've got static caravans, you've got camping, you've got lodges. There's a whole host of different rental properties available. Just some key statistics that we're seeing. The market itself is seeing a growth between 5 and 15% per annum. And UK second homes, the growth of about 5%, which PricewaterhouseCoopers have forecast growth of supply between 4 and 5%. So the market is in strong growth, and it's an incredibly exciting industry to be in at the moment. Just with regards to the property market, we are seeing a lot of investment. We are seeing as well, there's a lot of mergers and acquisitions happening between the organisation. And what you can see in the bottom right hand of this slide is just some of our sister brands that's allowed us to grow to over 21,000 properties. We are seeing as well that what we're trying to do is get to 35,000 properties by 2023, as we've still got quite a way to go. Interestingly, and I think Reece touched on it beforehand, we're seeing the customer demographics change somewhat. So we are seeing new customers entering the market that are used to go on cruises, which obviously they can no longer do. So people are starting to fall back in love with the UK again. But from Sykes' perspective, what we're seeing is the number of customers are actually increasing. So back in 2020, we saw 1.6 million customers, and that's actually increased to 2.3 million now. Additionally as well, just with regards to how Sykes operates, we are seeing about a 46% repeat booking rate, which has increased 2 percentage points year on year, which obviously means they're happy with the holidays they're going on, they're booking with Sykes again, and people are generally falling back in love with the UK. This graph here, we did a recent survey, and it was just to understand what the motivating factors were behind any customers that wanted to book a holiday. As you can see here, price needs to be right, location, quality and reviews. So it doesn't really give no real surprises. Interestingly, what we're seeing with the Southwest, and in particular Devon and Cornwall, we could have booked them over July, August last year 3 times over. So what we're seeing within this area in particular is that the demand outstrips supply massively, meaning we need to get more properties within this area because we've got the customers that want to book the properties there as well. And then finally here, this is just kind of giving an idea of trends that we're seeing. So you can see that 33% of Brits are going to spend more holidays following the pandemic, and demand for glamping's actually increased massively. Naturally, we saw quite a lot of people as well that wanted to have a dog during lockdown. So 1 in 3 holidays actually do take a dog on holiday. So dog-friendly, pet-friendly holidays is massive. One thing that we are seeing as well that's influencing the choice is kind of like the outdoor space and garden, proximity to the beach, and good access from a technology point of view, because a lot of people like myself are working at home, or obviously have got the ability to work wherever, providing they've got the technology. And that's where we're seeing the increase in workations as well.
So I think, again, just looking at moving into this space, we're not specialists in terms of the short-term staycation market, and leaning on a partner like Sykes with the sheer size that they are and experience that they have, we're identifying what would definitely work for overseas investors, seeing this as an opportunity of value, and more or less partnering with Sykes to do the overall management. It's not mandatory that you work with Sykes, but I think, again, just in terms of the security and how much they actually advertise and the work they put in the background, it's just the reassurance for clients who are based offshore looking for high uncapped rental potential. Chris, I'm not sure if you had any questions for Sykes or for Carol.
I think that Carol covered that off brilliantly, and I love the idea of taking my dog on holiday. That's great. I just wanted to declare an interest, by the way. I spent my honeymoon in Sidmouth, which is why the marriage didn't work. But anyway, sorry. Is that now over to? Is that Jonathan now?
So we'll give a quick intro as to again, kind of the area and the reason why we are focused in on this sector. But for me, just researching into Sykes stats, given that 60% of Brits are expected to remain in the UK for this year's summer break and next, we definitely think that, again, even based on last year's figures, that it's a very buoyant market. And if we are looking at the uncapped nature, i.e. from nightly stays, there can be some significant return on investments for clients who are either looking to buy in cash, but as I'll let Jonathan kind of explain, we have been able to secure mortgage options. But just talking on last year, so 2021, the average income was actually up, or was actually at £9,500, which was a 56% increase from the same period pre-COVID. Now, again, if we are looking at property in its entirety, typically we look at growth on that asset. But if we're looking at a 56% increase on income, we're not going to be able to achieve that with a typical buy-to-let. So it really is lucrative from an income perspective, just off the back of, again, the sheer demand that Sykes are looking for in terms of replenishing their stock, getting new stock onto their bookings. So for us, the investment case very much sits well.
A question's just come in, Reece, if I can ask it whilst we're going along. What about the winter months? Do people still use them during the winter months?
So people will still use them, and I'll pass over to Jonathan to cover off an overall average cash flow, because again, it is very seasonal, but certainly in kind of winter months, there is a lot of demand, and I think Carol can probably explain a bit more in a bit more detail, but there are kind of peaks and troughs seasonally, but we're looking at the blended average across the year. But Carol, I'm not sure if you want to kind of give your comments on demand per season.
Yeah, definitely. We are seeing, so Reece is correct in what he's saying with regards to kind of like the peak, so during school holidays, for example. But if you're putting features in such as wood burning stoves, if you've got hot tubs, you're appealing to quite a wide variety in a market perspective. So actually you're going to generate all year round availability. But what we tend to look at is the full 52 weeks of the year and total income that's generated. But we always encourage that any owner would accept short breaks as well, to make sure that they're mopping that up and adding to their income year on year.
And just to add on to that, if I may, that obviously through the winter season, you've got Christmas holidays, you've got the half term, October half term in February, and you've got a lot of people, especially if you choose the right locations, that are walkers, dog walkers. They're actually storm chasers. There's people that actually like it, the fact that they're not in the middle of summer and haven't got places with kids everywhere and running around. It's a lot quieter. So there is definitely demand through winter season.
This year we actually saw during the winter months it was an increase of 20% from the year before. So there's definitely a high appetite there as well. So
I'm interested, Jonathan, to know more about storm chasers.
It's not quite my pastime, Chris, but believe you me, there are people. And again, on the when you look at the places like Sidmouth, like Bude, like Newquay, they're big surfing towns. So in the winter they get some real rough seas. I was here in November down in Sidmouth, and the place was packed on a weekend, and everybody was just watching the surfers. It was unbelievable.
Oh, thank you.
Well, just to add on what Carol mentioned, I mean, looking at kind of market sentiment from a global reach, and just simply the word UK staycation in terms of a Google search. Now, okay, it's off the back of the pandemic, we've seen a huge spike, but if we're looking at kind of pre-COVID, Sykes still had a business model. They were still very buoyant in terms of holiday lets, but it really kind of, for me, explains how much in demand and why typical buy-to-let property owners are converting them into short-term lets. And as we'll go into the development for Sidmouth, which Jonathan will cover off, I think if I'm looking for somewhere to stay with friends or family, even if you are looking at, let's say, for instance, a periodic house, it won't necessarily facilitate everything that you'd be looking for if you're going into particular areas. And that's why we've identified this particular project. And we have got a lot more in the pipeline that we are really looking to try and offer clients. So without me going into too much detail on the area and location, Jonathan, you're based in Sidmouth at the minute, is that right?
Yeah, I'm down in Devon and Cornwall, yes, for a few days, correct.
So I think you can probably give a first hand kind of overview on the area itself, and for people who don't know the Southwest and Devon and Cornwall, just a general kind of overview on that part of the UK, if you can.
Okay, so obviously Devon and Cornwall, very popular Southwest location in England. We try and focus on towns, villages on the coastline. Obviously, water's a massive attraction. Just to run through Sidmouth. Sidmouth is on the south side of Devon, on the Jurassic coastline. It's also an area, an AONB area of outstanding natural beauty. Currently a population just short of 13,000 people. It's a very charming town. Lots of fine beaches, natural reserves, coast paths, hotels, shopping, etc., etc. I think about 18 months ago, Sidmouth was rated by the Times, the Sunday Times, one of the top places to live. The experts, Bricks and Mortar, a subsidiary of the Times, said just quality restaurants, sailing club, lots of nice independent shops, and lots of really good F&B. Location-wise, we're about 20 minutes from Exeter Airport, about 11 miles. We're 3 hours drive here from Birmingham, and about 3.5 hours drive, 4 hours train from London. Very accessible off the M5 motorway. Obviously connects the Midlands to the southwest of England, and it's a real town. You know, it's got a working community as well. So therefore, it's busy all year round. Lots of facilities. So I think what I try and explain to people is when they're looking at a holiday let, the location, the property is obviously very important. The development is very important, but what's equally as important, so when somebody books a holiday let cottage or property, they don't go to sit in that property for a week. So I come down with my kids, I've got to have things to do. So the town and what the town has to offer is equally as important, as was demonstrated on one of Carol's slides earlier, that the location, not just the property, is what people look for. So you can have an amazing property, but if it's not in the right location, there's not enough for people to do from a holiday perspective, whether it be family or walking or whatever, then it's no good. Sidmouth has a golf club, it has cricket club, it has tennis and croquet centre, it has rugby, it has a large cinema, it has a separate theatre for live performances. Chris, you could probably do one of those performances sometime, maybe.
I'm just Googling storm chasers.
Obviously, lots of surfing, lots of fishing. There's some big brand shops here, Tesco's, Costa, Boots, etc. It has a large hotel, large hospital. It has 3 or 4 4-star hotels down here, the Victoria, the Belmont, the Harbour and Spa. If you look at the ratings for the big hotels down here, average 4.5 rating out of 5. So I think the location of Sidmouth is really excellent, for the people that are going to want a holiday here.
I've got a short video just to highlight exactly the benefits of Sidmouth and really what it's like as a town. So I'll play this quickly. So that's Sidmouth. Jonathan, do you want to give us an overview on the project that we actually have access to, and really what investors can use as the opportunity? I think you obviously being based there and close with the development. If you could cover off the project itself.
Yes, we'll do it. Just one point to make out. So when we look for a holiday let project, we obviously have to work back. Any investment property has to work back from tenants, from visitors, from guests. So that's why we work very closely with Sykes to look at where are the key areas. So just to mention that Sidmouth actually ranks 85th out of 30,000 location searches within Sykes data, which actually puts them in the top 1% of searches. So it's very important for us to work back from that location. And then obviously what we look to do is to find, opportunities, developers, land, property in that particular location. That Devon's hit a 76% net occupancy for 2021 for 2 and 3 bedroom properties. So that's the key driver for us at Global Residential. So fortunately, we managed to get introduced to a developer that has an existing site just outside, about 5 minutes outside of Sidmouth town centre. That site currently has about 56, 57 holiday let and some owner occupier bungalows on. And they got planning some years back to build an extra 17 units. And we've got 15 of those units, new build 3-bed bungalows. Prices start from £256,000. Each of those properties will have an outdoor hot tub, and obviously it sits on about 16 acres of land. Again, Carol mentioned it's all about the outdoor space. Reason we put hot tubs on these is because they were one of the most searched for, would like to haves when people are actually searching for places to holiday with their families. Parking available. We've got yields between 7-9%. Payment plan is 25.75. And completion we're expected on or near to Easter 2023.
Let's just go back on that, Jonathan. Purchase plan 25.75. Can you just dig into that a little bit more?
Yeah. So the deposit 25.75 on completion, Chris. What we've really has been fundamental in the last in the last few months. Donna Spencer, founder partner IPFG, independent mortgage company that we all know well, has worked tirelessly to try and find lenders, because the holiday let market in locations like this comes with a restricted title, which basically means it cannot be your primary residence. So therefore, you can live there 52 weeks in no issue, but it can't be your primary residence. So therefore, it's been more challenging to get funding from mortgage lenders. But Donna's managed to exclusively secure 3 lenders at the moment, and that's increasing. She's got a couple of more kind of sitting on the fence with products. So we've got up to 75% loan to value mortgage borrowing, anywhere between 3.7, 5.9% rates, depending on status, location. So that's been a massive breakthrough, Chris. For this,
it's a game changer. We've spoken about this before, and I've always said it's the mortgage is what people want. They want to leverage, and that is a game changer. So, and I always say at this point, anybody's got any doubt wherever they're buying, with Global Residential, whatever, always put an approval in principle in and get a decision in principle out before they move forward. So I've always said it's my little advert. Sorry, Jonathan, I interrupted.
Yeah, no, not at all. So yeah, that mortgage that Donna's come up with has been instrumental in this project.
I think just to add on that, we will cover off on the next slide a cash flow scenario, but typically for clients who have a larger disposable amount of cash, looking at this as a cash purchase, in my eyes, would be the best option, just because you are looking at high uncapped earning potential, but it then also allows clients with smaller amount deposits to actually buy into a very lucrative market and still be cash flow positive. So for me, it's a great opportunity, whether you are looking to use mortgage finance or still looking to ultimately buy in cash, which I think was the main reason that we looked at this sector in the first place. But I'll come into the cash flow shortly. If you want to cover off a little bit more about the master plan and the
as
new
you can
builds.
see, the master plan has, I think, circa 57, 58 properties. The ones in blue are the new build, which will be started within the next couple of months. And they're single-story bungalows, as you'll see from some of the pictures that we'll move on to. So there's no infrastructure works to do, no groundwork to do, just raft foundation and then just single-story. So these 15 bungalows that we're selling, they're infill within that existing development. As you can see, as you drive in on the right-hand side, there's a community centre which is also going through a refurb program now, which will have a pool, a reception office, and a gym.
I think on the next slide as well, just to highlight that some of these do have sea views as well, right? So from the top of this master plan.
Front ones. Yes,
yeah.
Correct.
So this is just an example of some of the existing holiday lets and holiday homes, but JL, you being on site a number of times, if you want to kind of cover off some of the key selling points for us.
Yeah, the bungalows, they're conventional build, as I say, single story, pitched roof. They all come with fully fitted kitchens, bathrooms, everything, furniture, knives and forks, toasters, kettles, everything. So every villa comes with all the FF&E. You can see on the gazebo on that one in the top left-hand corner, that's where we will drop in the hot tubs, purely and simply because, you know, Carol said, look, that will just increase your revenue. So we're dropping hot tubs in all of these. And
then to the right, you can probably vaguely see some of the sea views as well.
Yeah, it sits on a large, nice grass site, and then yes, the sea for the frontline ones is possible.
So I know you've worked very hard on the average cash projection and cash flow. So yeah, I'll pass back over to you on.
So just a rough overview. You know, an average selling price of these 15 is 289,000. 3 beds. Typically, you would have a 37-week occupancy, but there are, as Carol mentioned, there's sort of 2-3 night stays that can be accommodated as well. So again, just historically, data tells us circa £1,000 a week from a weekly rate. So you have a gross income there, obviously minus the lettings management, and then of course you have changeover and cleaning, welcome packs, etc., and then it gives you a net income. I mean, as a rule of thumb, holiday lets are 30 to 50% stronger yield than a normal AST, and then that's only over a given period of time. So typically 35, 37 weeks as an average. So if somebody buys it, they can A, get 30, 50% more yield than a normal AST, and B, they've got 15, 16 weeks of the year themselves. They can look at the calendar and slot in and obviously have their own use. So it tends to be bought, by obviously a sophisticated investor that tends to have obviously primary residence and have other AST investment properties, but they want a lifestyle. But equally, they don't want to sacrifice. They're not multi-gazillionaires, so they don't want to sacrifice the investment element too. So what they have with this is they have the lifestyle purchase, plus they have a very strong yield. So it seems to tick a lot of boxes.
I think from my side as well, the sales lettings and management fees might seem quite high, and as a percentage, it probably is, but I think it's justifiable. I'm not sure, Carol, because we have discussed it on a previous webinar, but could you just kind of give a bit more detail in terms of how properties are marketed and really kind of the level on what Sykes would do over and above, let's say, an Airbnb as an example, because I think it's really important for clients to know the service that going through Sykes, they will be able to expect.
Yeah, of course, Reece. So with regards to our marketing budget, it's in excess of 25 million per year. And that includes above the line campaigns, any dedicated CRM campaigns that we do. And just going back to the presentation earlier, we do have a very loyal customer base as well. So what we're doing as an organisation, we're doing something right. So what you're buying into ultimately is that marketing and exposure, the customer loyalty and repeat business. And then we manage that full customer journey on behalf of all of our owners. So it's very hands-off, it's hassle-free. And we're trying to generate as much income as we can as possible. And that's through the pricing as well. So the pricing will change throughout the year. So we operate a supply and demand model. And we make on average about, I think last year we did 20 million price changes, and per property we'll make 100,000 price changes each year. Just making sure we're trying to get as many bookings as possible at the right price at the right time for you.
So
a question's just come in actually at the bottom. Is there a period of time where, say, once a year you go in there and refurb anything, any breakages or that sort of thing? How does that work?
Chris, if I could interject, so let's just be clear on this point. So Sykes are a lettings agency. Sykes don't manage. Right. So the 4 key elements to holiday lets is, number 1 is the right location. Number 2 is the right property in the right location. Number 3 is the lettings. You need the bookings. People need to be turned up with their suitcases to come and pay a decent, fair rate to let that property for a few days or a week or a couple of weeks. One of the biggest challenges is management, because if you turn up, Chris, if you turned up to a holiday cottage with your family and you walk through the door and there wasn't a bottle of milk in the fridge and the linen wasn't crisp and clean and ironed and you couldn't get the TV to work and there was some dust in the cutlery drawer, that probably would straight away get a really bad review. So what we do and what Sykes do is work very closely with local managing agents. So the turnarounds is absolutely key. And on that very point you've just made, Chris, regarding maintenance, there needs to be a 24/7. So we have in-house 24/7 call-out team. So if somebody turns up with a leaky tap, it gets addressed. Obviously, on the bigger point to do a refurb, yes, typically you're looking at 35, 37 weeks a year. So if a cottage after a couple of years is looking tired, then you can easily slot in. Or we can look at the calendar, and if it needs a lick of paint or if the carpet got burnt or damaged, we can change it. So we can do ongoing maintenance. That's not an issue.
A great answer, thank you.
And then I think for me, it's finally the key takeaways from Sykes. Pets was the #1 search feature, which would earn more than 54%. For properties in the same region. Wi-Fi for us is up again, kind of 16%. And really, if we are kind of progressing in this sector, we just want to have as much raw data from Sykes and the amount that they spend on marketing. We basically lean off them in terms of what we can provide for overseas clients. And if we are looking at, let's say, using mortgage finance, even though we could slightly get the operational costs slightly less using an Airbnb type model, but really keeping that high occupancy level high and a true representation on what that income should be for a nightly stay. I think we've packaged this pretty well to make it a pretty robust investment opportunity for clients. So for me, that was pretty much kind of my closing note. But Jonathan or Carol, if there's anything more you want to add, most certainly kind of for future projects as well, because this isn't the only development that we will be offering clients, but that was kind of a closing note from me.
I know obviously Carol is looking for properties in this location. I think Sykes have circa 25, 30 2-bed, 3-beds within a 10-mile range of Sidmouth, so obviously they're really keen to get more properties. So, that's why we hook up with them and see where they're looking for properties and try and dovetail into that. Just a quick one on the developer Reece Landmark Group, founded in 1988, based in the West Midlands. They're a private development company. They have circa 300 properties delivered to date. There's 450 odd in different phases of construction at the moment, and then they've got about 3,000 in the pipeline. They're a well-funded small developer. Primary use is sort of residential housing, but they do have a dedicated division focusing in the specialist sector of holiday lets. So that's why Global Residential, we've linked in with them to really to get really focused on the holiday let market. Just final one for me, update. We're currently up to I think 10 sales now we have out of the 15 units. So we've only got 5 left as we speak. That mortgage has been a big plus, and I think the fact that the clocks have moved forward, the daffodils are up, the sun shines out in summer, although not that much in Spain, so Rebecca said. So that's really it does seem to be quite seasonal.
And of course, one thing you haven't mentioned, which was on the video, you have Morris dancing outside every evening. I just love Morris dancing. Jonathan, that was great. Thanks very much. I'm going to go storm chasing soon. Reece, always good. Rebecca, thank you very much. Rebecca, can we put you down for one? We just heard there's only 5 left.
Sign me up. No, it's a beautiful location. Sidmouth is absolutely stunning town, and I've got family down that area, and it's really difficult to find a holiday let in summer. So I think it's a great location for a holiday.
No, I know. Well, as I said, I seriously did have my honeymoon there, but there we are. I'll send pictures. I'll put slides up of my honeymoon if you like. So thank you, Carol. Can't see you, but thank you very much. That was really professional. And guys out there, we were going to talk about other global residential stuff. Obviously, Victoria House in Manchester. Please talk to your wealth manager. Talk to Reece and the guys if you want any information, or talk to me. And this, by the way, this as well as other top performing shows are on our website. And that's my phone. That was brilliant. Are on the website. So if you want information on this, it should be up soon. I've got to thank Alex for hosting it. Thank you, everybody. Thank you, Rebecca.
Thank you very much.
Thanks, Chris.
Thank you,
Reece.
Thank you, Chris.
Thanks, everybody.
Thank
Cheers.
you.
Thanks, guys. Bye.
Bye now.
Bye.